nothing crazy happens, we don't run into any major time-consuming issues, that gives us an official launch date for the entire pack trade group to have Gunship NinjaTrader access the first major week of August.
Yep. And then with the simulators should begin launched for the people newer in the boot camp that are practicing how to read the live price, right? They should be up and running and completed by next week as well. See, if you guys suck at rolling 3-hour lines, you have a simulator for it. Same with line and apex, same with candle science, daily classification, 4-step reversal, and then I'll do one for the 4-step continuation for the true days as well. And then, like, I can't emphasize it enough, like, right? You guys pay $100 for the boot camp, right? You get me during war game and you get me during re-engineering. So, like, it's very important that if you have questions, like, you either jump in the chat, the voice chat, and one of the squad leaders will jump in and answer those questions, or you show up to the re-engineerings, right? And another thing is, like, we're getting better as a community understanding, right, the difference between the two probabilities. Everything's got two sides of a probability, and knowing when to turn it on and turn it off. Like, today had a 21% probability of being a true, and I specifically said during the war game, like, this is going to be the day that you're going to see the longs and they're going to send it true and everybody's going to blow their accounts, right? That's why we have steps to tell us exactly when to go for the 20% probability. So continue working on that. And yeah, everything's groovy. If you don't know, if you haven't heard, been around the block, Shag Nasty is doing a PG-13 and above Asia trading show at 1800 for the pack side, and it's pretty entertaining and fun.
And Ryan,
doing a great job.
Ryan's been doing it too, knocking it out.
Did he commit to it?
Well, not committing, but he's been irregularly streaming with Shag every now and then. He even got that short last night too.
Nice. I figured that's a great short. All right. So moving on, you got any other announcements?
Nah, man, let's get started.
All right, sounds good. And then the last thing, if you are interested in, being a live trader, you need to reach out to Austin and just tell him what time frame, and then he'll let you know if he's got availability or if he doesn't, or if he does, like, what you have to do to get that slot. All right, so coming over to candle science, we did everything that we were supposed to. So now we're going to use yesterday and today, and we're just going to go on and do our candle science for the night, right? Biggest thing we're looking for on the daily chart right now is how we close, right? We're below previous month 50, we're below NFP Friday, right? So what does that tell us? What do we need to understand? What do we understand about being below previous month 50 and NFP Friday? 50% red days, 50% green days, but more so, there's not more bearish days, Mando. And this is one of the things that you got to understand, right? Almost in every bear market, right? We can consider this a bear market. You can see just by eye, 50% green, 50% red, right? There's another one. You got a little bit more red, but then the greens come back, right? You go to official bear markets like in 2022, right? You can see 50% green, 50% red, right? The pullbacks are just as violent, right? What's the next thing we've got to consider, which is kind of awkward, right? Considering it's way down low, right? Which is why I'm not going to... What else? What are the three types of pullbacks? We know we're in the first week of the month, right? So what are the three types of pullbacks that we have? What are the three types of pullbacks that we have? And two of them we can be determined based off of being below previous month 50% and NFP Friday. We got monthly slowdowns. Well, this ain't going to be a monthly slowdown, all right? Right? Because the monthly slowdown typically happens above like this would be a monthly slowdown where we're above the previous month 50%, we're above NFP Friday, and we just tighten up the volatility a little bit until the next month, right? We've got quarterly pullback, right? Which if we come back to last quarter's low, like we got big issues, right? And then we've got yearly change of characters, right? So like as we saw this month, right? Like once we take out quarterly lows, we wait for the next month to see if it wants to rotate up, just like we did on this month, right? And if we can't rotate up, then we have to call it a yearly change of character, like we had to do here during this month. During last year, during March, and then we wait for every single month to see, does it want to step back above NFP Friday, previous month 50, and start to trend back up, right? Both month quarterly pullbacks and yearly change of characters give you a great time to, really do some longer term investing, right? When your time horizon is a little bit longer. And then monthly slowdowns and what you see here, right? It's just your time to just, take your foot off the brake and see what's going to happen. All right. So we're going to go back to the lower time frame, which is just looking at today and yesterday to put probabilities on tonight, right? This session is for the Asia traders, something I'm trying to do a little bit more. I'm going to try to find a way to put it into the green engineering. And that way it's another learning opportunity for you guys to see. Not only do you get to see me do it during War Game, but you're going to get to see me do it with Asia, right? During re-engineering, right? So yesterday was bullish. Today was bearish. Looks like we're going to close below previous day low. So we're going to put that in our candle science. Let me drag this over here. That's what it's supposed to be. So we're going to come over to candle science. We're going to say, hey, we closed below the low. Right here, so C1 low, close below it. Right, we can see that the previous day low, which would be today's low, has a 65% probability of being touched. The previous day high has a 21% probability of being touched. Right, so we're going to come over here and we're going to say 65 and 21. All right, now we are going to consider what happens if we start stepping above the previous day. When I say previous day, I mean the days, right? We're doing it for the overnight. So the mid and then this opening. Now there's not much edge. We know the probabilities will flip once we get this opening, right? So there's not much edge. What is that, like 5 basis points, right? It's good for like days like this. It's good for days like this. Right, but for this full developed candle, right, we're going to use the mid as a understanding point. And wouldn't you know that the previous day mid is going to line up with previous month mid, right? So we're going to pay attention to that, right? And we're going to say, hey, what's the probability if we lose that open or the mid, right? And we can see that high jumps up to 68 and the low jumps to 45, right? So we'll put that 68, and this is going to be 45, right? All right, so now we're going to go in and take off that opening. We are going to take out that low, right? Because it's a higher probability, right? And we're going to come over and put our percentile. So this represents previous day low, aka today's low, right? And we're going to put our 30th percentile, which is at 0.22. So we're going to come over here. Fix that line to this low, come over here. .22. Right there. We're going to put our 30th percentile box right there. And then we're going to go find our 50th percentile. Now we know that that's got this 0.22 up for previous day low. This happens 70% of the time out of this 354. Now we're going to go to the median. All right. Now we know that volatility is expanding, so we're going to expect to get at least the T50, the 50th percentile, which is at 0.38. Which is right there. And then we're going to come to the 70th percent, which is at 0.62. So we know out of this 354, this has happened 30% of the time. And hopefully you're training with the gunship, and all the stuff that we do makes you understand that just because this has only, this bottom of the red box only has a 30th percentile probability based off of this candle and this candle of getting hit, there's a time and place, right? And so that time and place is when volatility is expanding and we have a red daily candle, right? So if you take shorts out of Asia tonight and like we're selling off and we get out of Asia, which is more likely to be a true than a false, right? This might be a good target, who knows, right? All right, so now we've got our candle science done. Cool, Shag, you good? You understand? All right, cool. So we know previous day low has got the higher probability, and the highest probability to get hit is 20 basis points off the previous day low. Sorry. Now we're going to come under here. We're going to change our indicator, and then we're going to war game the day after I do this. Right? We're going to put Asia on, right? And then we're going to come to the daily profile. And we're going to change this to Asia, right? Still in the NASDAQ. And so now we're going to use New York 1 of today, which we know was a short true and a long false. Oh, we haven't gone false yet, but I'm just projecting that we're going to go false because we're like 2 handles away from it, right? And then we can see that whichever way we decide, we know that right out of the gate, they both have 53 and 51, right? So we can see that New York 2 is most likely to get hit if during the forming of Asia, right? So from 1800 to 1930, New York 2 is has a 50% chance of getting hit, right? Now, if we go long out of Asia, right, we know that there's a 63% probability of it being true and only a 36% probability of it being false. And if we are going to go false, majority of the time it's going to happen between the 2000 hour or the 2100 hour, right? Now we're going to click false, and we're going to see that the major pivot, if we go long first, right, is going to happen around tonight, based off of what New York 1 and New York 2 did, is going to be 2100. Now that's typically the 2000 hour, right? So the one unique thing is if we break long in Asia today, we know we might have to give it a little more time to go false in the 2100 hour. We're going to pay attention in the 2000 hour like we typically do, but we will be well aware that the 2100 hour, 21 to 03 can do that move. All right, so if we go short out of Asia, right, we can see it's got less, but it's a 57% probability of true and a 42 of false. And then the time for this is back to that 2000 hour, right? The 2000 is when the major pivot comes in, and then we should be crossing over the false line around 2100. And one thing you got to pay attention to if we go short false is this deep retracement. Like the ICT traders would call this the OTE, and then this would be second leg of distribution, and this would be your little fractal breaker and then continuation, right? But we know that the major pivot will happen in our world at 2000, and then Q2 of 2000 should take out Q1 low. But if, remember, those falses are the lower probability, right? We're more likely to trend until around 21, 2200, and then go into a range until London. If we break to the short side, if we do the long, it's the same thing. We trend until like around midnight, and then we go into a range until London. All right, so there's your Asia breakdown. Everybody understand? Any questions? Cool. Is that helpful? There's some new people in here. Weird. Where are you new people coming from?
Do we have 2 different bounty hunters in the community now?
That's literally what I noticed.
I was like, did Mando change profile picture? That's funny.
Nice. Mando, you got a buddy there because he's part of the boot camp. You need to help IEM or LEM. All right. So now let's go into wargaming. What happened today, right? Now, if you watched my war game or read Austin's, I'm pretty sure his was pretty freaking similar to mine, as it usually is. We knew that we had, let me switch this back to here. We knew that one thing to be true, all right, regardless which way we wanted to skin the cat, was what? What was the one thing that just glared at us all day? Right? What was the glaring obvious thing today before 9:30 open? Firecracker, which usually means what? Like, I don't care about firecrackers on days when I expect RTH to cover the high day and low day, right? 1 to P12 mid, yes, but like this right here, right? The 1800 high day. We got short, true, right? We put in our daily profile. It doesn't matter how we do it. Let's go back to New York. Let's reset everything, right? Short, true, broken, right? It doesn't matter which way we skin the cat, right? We go long, true, right? That's the only condition that we can think the high of the day might not be in. Long false, high of the day is in. Short false, high of the day is in. Short true, high of the day is in. Right? So either way we do it, right? We know unless we got a long true, right, which we said P12 mid would be the determinants of that, right? We would have to anticipate, right, that high of the day is in. Well, we decided to go short, right? And so we knew that there was a couple things that had high probabilities. P12 mid had a higher probability. We're coming off of an inside daily candle, right? So everybody's like, oh my gosh, it's an inside bar. Both sides got to get hit. No, they don't. Both sides do not need to get hit, right? We go very, very particular into exactly what we're looking for, whether it's a 5-minute inside bar, a 1-minute inside bar, a 15-minute inside bar, a 12-hour inside bar, a daily inside bar, all right? We don't care, right? Like we better, since this is a daily, we know we got to pay attention to this previous day mid. Well, first we have to get above the P12 mid and we have to turn this thing false, right? But going on, right, we know that we went short. And we know that today there's a 78% probability of false and a 21% probability of true, right? We defined our 4-step reversal versus our 4-step continuation, right? So our 4-step continuation reversal would be right here. 4-step continuation would be right here. Come to the random breakout and false. Let me make sure this is set up correctly. 0730 to 0830 and 1130 cutoff. We know that this is our area for our 30th percentile to our 50th, right? And as usual, the 40 basis points of the 6-9 box, right, lined up with the median of the 50%, right? 2 independent measurements that determine true versus false, right? And then this would be our 50th to 70th, right here. And so we know that, right, we're definitely looking for the reversal, all right? However, if we breach 40 basis points off the 6-9 low, we breach this 50th percentile MFB. If we blow through the short false low of the day zone right here, right, and we have a lack of 4-step reversal, we know we got the 4-step continuation for the true, all right? Now, we know that we use the 4-step reversal to define the major pivot for that 76% probability. Right? Do you guys understand that? Is that helpful, having the 4-step continuation versus the 4-step reversal to determine true versus false? Is that helpful? Okay. Because I did that, I had to just like I used obnoxious 4 steps reversals, like 10 o'clock takes out 9 o'clock's high if we're going up, instat low for the 10 o'clock hour. We're not trying to trade around that. We're making our trades off of the gunship movements or however you trade. However, once these actions have been done, it solidifies that major pivot or the continuation. So like if like today, you're just foaming at the mouth like I was for the longs, right? You could have a clear expectation to stop foaming at the mouth, wipe your drool up, close your jaw, and like move on. And now, what was my trade plan for shorts? Can somebody tell me? Do you remember what I said? If we get a short true, and it was shorts in general, what was my trade plan? Who's in my war game this morning? Was I going to take shorts this morning? Nope. And guess who did not take shorts this morning? This guy, right? But that's okay, because like I've been trading this market for a long time, and I know that volatility is expanding, right? We are having some pretty obnoxious moves, but I know that my job is to build my business plan over the next 100 trades in the next 1,000 days, right? And I know that this movement that you saw today, that's not my trade to take, right? And that's what I stuck to, right? So now we're gonna go to the 1 minute, right? That doesn't mean you guys shouldn't be taking shorts. Mickey just doesn't like, and the reason I wasn't, because at this point, right? Like I just was looking for the reversal, and I said, you know what? It's not worth the risk of that pop back up for the shorts, right? And sometimes I will take them, sometimes I won't, and some days I'll just catch it like a pro, and some days I'll just look like an idiot and sit on my hands and just enjoy the peace and quiet of not taking the trade. All right. So if we are going to take the trade, the shorts, right? Remember, we should have our gunship light on, right? And we're going to use yesterday since we don't have it. We'll do it during the engineering. And we know that for shorts, for longs, like let's say this was today, right? We cover the queen 10 basis points, but like, where is our first cash flowing target to the downside versus the upside? We've got these 6 stat MFE zones, right? What would the cash flow target for shorts be? What would the cash flow targets for longs be? And why? There's one thing me and Austin are intentionally doing is trying to get you guys to be more dynamic with the daily profile and understand that like you've got to adjust to the market that you are given, right? And you can't just be so linear, because like if it was a linear process that could get more than 15 to 20 basis points out of the market every single day, then like we wouldn't be here. All right, so for shorts, it'd be this first box. For longs, it'd be here because we went short out of New York 1, so we're obviously targeting the higher movement. For the sells, we'd be cash flowing here and then leaving runners to here or here. All right, so now we're gonna put this back on and we will war game the day. All right, so let's fast forward to 9:30. All right, cool. All right, 9:30 opened up. All right, started going up. Put on this. There we go. All right, so 9:30 opens up, 40 basis points. So we know right out of the gate, right? We're gonna have to be strategic within each position that we take, because 9:30 is very big. So we're either gonna have to use the high, the 25, the 50, the 75, and the low, or the 10 basis points above and below, right? To manage risk on if we are gonna take trades, right? Not all of us were still in shorts from the high of the day, like Austin. So we had to assume a little bit of risk, right? So we start selling, right? Right? We come, let me move this over, our 40 basis points. Right? We're blowing through the low of the day zone, right? Right? Lack of 4-step reversal, right? So now the only two other ones is this 40 basis points and this red line right here, right? To determine true versus false. Should be up here, right there. And you can see, right? Like this is what I'm talking about, like when I tell you, right? Like right now, right? If you're taking sells off of the low or this market break, like your risk could have been right here, which doesn't work all that much, and I'll show you why. Or right here or right here, right? So you can get that 30 basis points somewhere, right? It doesn't have to be obnoxious, right? 50 something basis points, 124 handles, right? All right, so, right, we're seeing if we can reverse. Gunship doesn't give us a front run. We start coming back up into the range. Looks like we're about to reverse. Right, now, right, what did I say about reverse trading? Right, one habit that I'm trying to get you guys in on this 930 trade. Should we be doing our full positions, or should we be doing a fourth of size and then finding places to add in? 25%, whatever. So like for me, like a full size is 15 micros, right? So 4 at here, 4 at the 50%, 4 at like the 930 high, whatever, like however you want to do that, right? And then cover the queen 10 here and then start offloading based off of your trade plan, right? So if you are taking longs, right, you got plenty of opportunity between here, like this 10 basis points and this low to start engaging with longs, right? And then you completely get stopped out instantly, right? Which is fine. That's the name of the game, all right? Right, and then what can we notice here? We can't even get back above 75 basis points, right? And now we're in the second 15-minute, right? So now, right, unless we do a 15-minute footprint rejection, because this is the low and this is the close, this is the wick of the previous 15, right? Unless we do that footprint rejection right here, right now, like we're gonna hit this and we're gonna hit this, and this is all she wrote. This was the trade that we were looking for right here, but guess, get below P12 low, make a new low of the day, start heading up. Right here is telling you, denied, stop, no more, it's done, right? Actually, I'll tell you exactly when. Right here, you breach the 40 basis points, whether you want to or not, right? And this is the part that's gonna like hold you back as a trader. You see me and Austin doing it all the time. You've hit all 4 steps for the 4-step continuation, which is the true state, right? Rules be rules for a reason. Just like if I get a doji alert, or just because like I still have to think, this is the exact thing that I use for quarters, right? If Q2 takes out the high, I think Q1, Q4 low, or Q1 low, Q4 high. Unless a quarter breached, then I think doji. Same thing with Apex signatures, right? One thing that will get you consistent in your decision making is using the same points at the same hour, at the same place, at the same day, every single time, right? The problem is, how many of you guys, right? How many of you guys at this point, right? After all 4 steps for continuation, I say every single day, that have been for months, how many of you guys kept looking for longs? Just be honest with it, right? Right? How many people are looking for longs? Yeah, like that's a common thought process. However, right? What instead of saying, so now, right? We have the gunship triggering, right? It triggered right here, hit cash flow target number 1. And we know that from here, this green box to the orange, right, is 90% retracement to 50th so 90% probability to 50% probability. Between this and this, right, what are some areas that we can say, instead of sitting here trying to long a losing trade, what are some if-then conditions that we say, all right, I've got to look for shorts. Well, obviously in a red daily candle, right? Why am I continuing to look for longs when my rules told me to stop looking for longs right here? We talked about it at 8:30. We talked about it every day. Wargaming and reengineering, right? So looking at the charts right here, and it's perfectly normal to think I want to look for longs. However, we can build some if-then conditions that will allow us to say, hey, at this point, I'm going to look for some more longs, right? What are some things that we can use, right? 9:30 high. If we can start getting closes above 9:30 high, which means 10 o'clock has to come all the way back up here, and then we're just going to be taking longs from here to P12 mid. That's a suitable location. That's something that we can do every single day, right? That seemed like a good, fair, reasonable expectation once we got the 4-step continuation to just wait for it to be obvious. We've got these MAE, MFP pullbacks, right? What are these? Are these of successful MAE pullbacks, or are they of all MAE pullbacks? They're from successful. So we know that right here, we're definitely, the green box, we're more than likely going to pull back there, right? So this is an area that we're going to say, hey, once we get above here, like I should look for longs. No. We know that this is from 50th to 70th percentile, so 50th to 30% probability from orange to red, right? So that's not even a good place, right? Although it's going to be tempting, right, to say, hey, I'm allowed to start looking for longs, right in the orange. Or we can do the red. Now, which is our 30% probability, our 10% probability of successful, right? So now we've got, right, 3 different zones. We know that we probably shouldn't start looking for longs in the green zone. Why shouldn't we start looking for longs in the green zone and start breaking our rules? Somebody tell me why. And I'm talking about this, not that I was looking for longs at this point, but I know, because I'm a trader too, I know what instincts that all traders have. Oh my God, we moved 1,000 handles down. We've got to revert to the mean. Right? We're not going to look for longs in the green pullback zone because that's typically going to happen, and we can still continue to the downside. Right? The orange is when I was starting to alert myself, like, hey, we might be going long, right? But like I usually wait for this line right here, and once this populates, that's usually where my risk is drawn down to, right? Why above red pullback do I start caring about longs and putting any shorts that I sold right here? What's the 2 possible things that could be happening if we cross this red line right here? We're reversing, and this will not be a successful 9:30 to 12 o'clock sell, right? Or we'll put in a new successful MAE in. Either way, like I'm not here to play that game, right? My job is to go with the higher probability. So my risk for sells are here, and my decision making is right here for, all right, get ready to start taking longs to the upside, targeting here and here, right? But until we can do that, right, my job is just to focus on here, and read live price, all right? And let it tell me what it wants to do.